Seoul just hit the emergency brake. Both KOSPI and KOSDAQ triggered sell-side sidecars this morning. According to the Korea Exchange, KOSDAQ fired at 11:37, KOSPI at 11:40 Korea Standard Time. A sidecar halts all program trading orders for 5 minutes. A dual market trigger on the same day is a rare stress signal. Here is why that matters for U.S. investors. The catalyst is U.S. tech weakness, specifically a global repricing of AI-linked equities. AI software names, including Palantir, have faced sustained sector pressure, and that is compressing AI demand narratives worldwide. Samsung Electronics and SK Hynix are the primary global suppliers of HBM and DRAM inside the AI chip stack. When U.S. AI software multiples compress, the forward demand outlook for high-bandwidth memory gets questioned directly. According to the Bank of Korea, Q1 2026 domestic corporate revenue growth was the highest in 3.5 years. Operating margins hit an all-time record. But that outperformance was heavily concentrated in Samsung and SK Hynix. The broader recovery outside those two is more modest. President Lee Jae-myung acknowledged today that the semiconductor boom is deepening asset inequality, a signal that policy support for equity prices is not a priority. One exception, Dusun rose 9.34% today on AI semiconductor materials and energy business value, selective demand, not a broad recovery. If you hold SOXX or have Korea exposure through emerging market funds, watch whether US tech finds support before treating this sell-off as an entry point. Korea's corporate margins just hit an all-time record, but strip out Samsung and SK Hynix and that record sits on a very narrow foundation.